Hey guys, it's Dave. We got a report out today from the Home Builders Association. This is the housing market index done by Wells Fargo, where they survey home builders across the US and get kind of a sentiment as to what they're forecasting. Are we in a balanced market? Are they optimistic? Here is a article from CNBC by Diana Olick that will kind of go over home builder sentiment rises in April as builders grab near record share of the market. That's kind of an interesting take that we'll talk about. But basically, we've got builder sentiment in the market rose for April for the fourth straight month as the supply of existing homes remains scarce. The index stood at 77 on a scale of 100 in April. And we'll get to the number later. It's 45 now, and anything under 50, it's basically taking on a scale of 1 to 100, how confident are you about the housing market going forward? And 50 is kind of right on, like it could go either way. If you're lower than 50, where we're at is a 45, it's leaning slightly negative. And then back in April, it was a 77. Everybody was, April of last year, everybody was excited about the future. And we know what happened from then with raising interest rates and what that did for the demand. But the new listings of existing homes have fallen 25%. And so that's helping the new home sale because there's just not a lot of existing inventory out there. Builders note that a decline in mortgage rates to below 6% will price in further demand for housing. And I'm seeing that in the market as soon as we get drops in interest rates, even slightly just kind of below that psychological 6% mark, we see buyer activity pick up. And then if it ticks up into the 6.25, 6.5, we see things slow down. Currently, the index has three separate components. They look at the current sales condition, which rose to 51, so slightly positive. They have a 6-month outlook, which increased 3 points to 50, right on the average. And this is the first time that both of those indicators were positive since June. And then the buyer traffic is kind of what the lagging indicator is. It is at 31. So that's dragging the overall index down. Builders said that 1/3 of housing inventory is new construction, and historically that is 10%. So that's a big chunk of the inventory you're seeing is in new construction homes, as existing home buyers that have or existing home sellers that have a 3% mortgage are really reluctant to trade that in for a 6% mortgage, even if it means getting a better house. We're looking at just under 1/3 of the builders reported cutting prices in April, and that's down from 35%. And the average price reduction was 6%. Incentives, this is how they're getting people to buy. And I mentioned that if you're not subscribed to the channel, you should subscribe and see these videos. I did a report last week on kind of what we're seeing in the market and how new home builders are reluctant to cut price. They're more likely to offer an incentive, free upgrades, buy your interest rate down, pay your closing costs. And we're seeing that in 59% of the builders are doing that, while only 35% are actually dropping price. So you're seeing, again, more of the incentives versus dropping the price. And I talked about that in that video. Some key points to kind of break down. We talked about this, that it's at 45 and anything under 50 is considered to be negative. Builders said that just 1/3 of housing inventory is new construction compared to historical average of 10%. And then the lack of listings in the resale market, that's existing homes, is giving the buyers the edge. Let's look at the Redfin housing data, and you can kind of see, this will play into the next chart that I show you, how we do have this kind of seasonal dip in January, February. This is homes sold. This is not price. This is not, buyers versus sellers. This is not how much inventory. This is closings in all Redfin metros. You're looking at a dip in January, February, and then that spring rise. This red line is COVID. We already had a dip before COVID even hit. This is 2020. And then we had another dip after lockdowns, and then a huge run up to play catch up to our normal number of homes sold, and then yellow is 2021, same similar pattern without the lockdown dip, and then 22 we had a similar dip and then the rise, and then as higher interest rates started to take effect, we didn't reach the previous peak of homes sold, and we had this kind of gradual fall off down into wintertime. Again, your dip in, oops, something changed there. Your dip in 2023, that's this year, and then now we're seeing things pick up. So here is that chart actually here that kind of shows the sentiment. So this is the housing market index, and we can kind of see over time from last April how things have declined, from 77, 69 and on down to a 31 that we had in December. And now we're starting to see that climb back up, and that kind of goes along with the home sold, with the sentiment, with just the feeling of spring. And maybe this is not going to be such a bad crash that we thought it was going to be. And there are certainly home builders that are liquidating inventory and having a tough time, but with the lack of existing housing, that's helping them sell through that inventory. Another thing I wanted to point out here is those three segments that they showed in there: the present sentiment, and then the forecast for 6 months, and then the traffic. And so you can see that same fall from a high number last April to bottoming in December, and then making the slow rise back up to where we're at 50, 51 for the prospects, but the traffic kind of still lagging at 31%. So we can also go ahead and see how interest rates have been working for the last month. This is the Mortgage Daily News interest rates. The blue line here is the 30-year fixed. It's ticked up here the last few days. Same with all mortgages. You can still get an FHA pretty low. And like I said in a previous video, and again, if you're not subscribing, you should do that. But you can usually get below average interest rates. If you've got a decent down payment and a high credit score, you're going to see probably close to 0.5% below the going rate if you got, like I said, all those compensating factors. And so here's kind of just a quick look at bankrate.com where you can kind of shop for mortgage rates, and you're looking at like 5.5, 5.75, 5.875. These do have some points associated with them, so it's a little bit of an expensive upfront cost to get those rates, but that might make sense for you long term depending on how long you're going to hold the mortgage. It might make sense to buy that interest rate down and get it as low as possible on a monthly basis, because over time you'll make money on the back end of that. So that's all I've got for you on this. It's looking like we'll see how spring goes. There's some optimism, and although I guess overall they're neutral, but that's certainly come from the bottom over the last 4 months. And we'll see how rates do and how the economy hangs on to jobs and things like that going forward, and seeing how that affects housing supply. I will be here to report that. Thanks a lot for watching. Talk to you later.